Trading positions, which is an amalgam of retail investors, banks and institutions, and some people actually know what they're doing. So there we've got euro dollar 65% long, which obviously has been the way forward in the recent past. I think there's been a flip round now, though, because yesterday we were around 60% long on cable, but now 60% short. So it has been a change of emotion.
Yeah, and I think I think clearly that CPI print helped to change people's sentiment a little bit. We saw that in terms of what's been priced into the interest rate strip. I think ultimately, going into that CPI print, people were irrationally hawkish in terms of UK rates, and I think we've seen a reassessment of that. And I think the Bank of England is going nowhere for a considerable time.
Okay, and dollar yen, a bit surprising there that they're so bearish on that, 67% short. Maybe feeling a little bit of pain this morning. Short on dollar Swiss and dollar Canadian, which makes sense. 50-50 on the Aussie, which maybe is a bit of a surprise.
I would guess the only reason that's 50-50 because we've moved so far in such a short distance. So we do have a speech from the RBA Deputy Governor overnight tonight, and that could be an opportunity to push back a little bit against the strength of the Aussie. So I think it may that 50-50 balance may be more reflective of the path of where we've come from, rather than necessarily any overt sort of uncertainty regarding the Australian story.
Right. I think at the moment we're at 79.02 on that, support at 78.80, and then nothing until 77.80. So it might be worth watching for people who want to stop themselves into a trade. Euro dollar that's the direction that I've permanently on. So I'm very happy. That's probably the only time I've seen that in the last 6 months. All long euro sterling. So.
Yeah, long euro sterling makes sense. I mean, obviously, we're just getting around to the end of the second round of face-to-face negotiations in Brussels. It'll be fascinating to see how the press conference with Davis and Barnier plays out today. The Brexit divorce bill, I think, is going to be an inherent problem for investors to get their minds around, because, of course, that could well be an initial or a near-term sticking point in terms of negotiations. So, absolutely, I think the path of least resistance is definitely towards a high euro sterling. The question is whether we stop at 90, 92, or whether people become more bullish than that.
I'm looking for parity myself, but the interesting, I think, if you're looking at the daily chart there, the intraday chart there, we found support after the push through towards 89 pence, well above 88. So that the market didn't even need to test that as support.
No, I mean, I said this morning that if we saw a dip to 88.20, that was probably going to be a good level to buy. Obviously, you
88.71 now. So
well, yeah,
you and your team have done well today.
So it's my team have all pulled together in the right direction thus far today.